Hey everyone, I'm Charting Man Dan with the Chart Guys. We're going to look at some longer term time frames in this video with the broader market as well as some individual stock setups that I'm looking at. We've done these videos a few times over the last couple of years and they've led to some really nice patterns that saw a very significant amount of follow through. Let's see what we're looking at here as we head into June 2024. So going to do a quick refresher on a couple of the previous patterns, and if you Google Chart Guys long term, you'll see the last 3 or 4 videos that I've done of this style. We were watching Costco monthly equilibrium, high, low, lower high, higher low, lower high, double bottom, lower high, higher low. You cannot get any tighter than that. We know a break is coming. The bull break happened at 513.68. From that point forward, we then went up 59% over the next 15 months. Actually, no, by the time it broke bull, 1 year. So 59% in 1 year on that pattern conclusion. Then we had CCJ, same thing, monthly equilibrium. Lower high, higher low, lower high, higher low. Bull break happens, and that bull break leads to 80-something%. All-time highs, 89% in the span of a year. So both of those patterns had long-term follow-through, and at no point on the long-term time frames were there any fake-outs. There were monthly higher lows, we held monthly EMA 12, and they just kept going up. Monthly bull flag on cost just confirmed. So a nice long-term pattern to just set it, set your stop, and forget it because there's been no red flags on these longer-term time frames at this point. Now, I love equilibriums, as you know, and so there's some more that we're going to be watching on some of these other names. But first, let's check in on the broader market. SPY, we're going to start on the long-term time frames and then zoom in from there. 3-month, and I only started looking at the 3-month the past few years once we saw the bear market in 2022, and that helped me look for the bottom and that higher low in that bear market. But we're going to go 3-month time frame, monthly time frame, weekly time frame as far as how we're going to zoom in with the current setups. So this is where we had the SPY monthly cup and handle. This is what it looks like on the 3-month time frame. And if you want to talk bear market, look back at the history here. We've got 30 years of history. At no point have we confirmed a 3-month downtrend. What does that tell me? That tells me that the next time or the first time that that happens in my lifetime, well, maybe, yeah, my lifetime, first time that that happens in my lifetime, it's going to be massively significant for me. And so what would that have looked like? Well, if 2022 was really a significant bear market and the start of a paradigm shift, we would have confirmed the 3-month downtrend. But we didn't. 2008, stair-step drop. Significant, yes. Tons of weakness, yes. But once that bottom was hit, that was it. Straight up from there. 2021, the dot-com bubble. Same deal. Massive pullback, yes. Stair-step drop. No clear lower high, lower low downtrend. So I'm not going to be significantly bearish markets until we get that first long-term downtrend confirming. Monthly bull flag just confirmed. So we had monthly bull flag all-time high, monthly bull flag all-time high, and now it's a weekly bull flag attempt. With the current consolidation, my mindset is if we do not lose weekly EMA 12, it is healthy. And we've been watching this past week on this pullback, healthy rotation, while semiconductors and big tech, NASDAQ got the consolidation that we knew was inevitable. We saw XLF, XLV, IWM, XLU, XLE, all these other sectors bouncing to offset or help offset a good bit of that weakness. Now we know NVDA and semiconductors and big tech matter the most in the markets, so their weakness did still pull us down, but we were not seeing all sectors dropping together, which means we were not seeing money leaving the market. We were seeing money rotating around, bullish, healthy rotation. So it's a simple statement. If weekly EMA 12 is holding and we're not closing below it, it's a bull flag looking for new all-time highs. The harder we run up this summer, the more cautious I'm going to be selling long positions. You know, if we're 10% higher than where we stand right now and we're heading into July or August, that to me means taking profit, being extra cautious, and looking for something similar to 2022 where massive euphoria led to a long-term period of weakness. But we're not there just yet, and we're going to use the uptrends as our guide. We've got a clear monthly and weekly uptrend at this point, and that has to change if anything is going to change. So longer term patterns that we're watching. Tesla, 3-month time frame. Absolute monster euphoria move, $11 to 400, just a little 4,000% move up, higher low, lower high. I'm scouting a 3-month higher low. There's been massive relative weakness with Tesla. We're seeing Tesla disconnecting from the NASDAQ more than I've ever observed in terms of the correlation just not being there on a day-to-day basis. There was a period of time where Tesla was doing exactly what the NASDAQ did on the 5-minute time frame, the hourly, the daily time frame, to different magnitudes, but very much the same thing. That is different this year. Whether that means there's big positions selling, I don't know. I noticed the same thing in Apple in 2024, and it clearly showed us Buffett was selling. So keeping an eye on that, and for me, it's making Tesla harder to trade for me because I am better at trading things where I have almost essentially, it's just watching the ETF that it significantly correlates with and the individual name. It helps me recognize relative strength and weakness, and it's just all jumbled up for Tesla right now. But I know I'm scouting a 3-month higher low compared to 101. I then go to the monthly. The monthly is in a bit of a stair-step drop. A monthly inside bar just formed. If the monthly inside bar breaks bull, then I'm going to be watching for the 3-month higher low to be set. I'll be watching on the monthly. Maybe we get an inverse head and shoulders. If the bulls can prove something, then we have to confirm a monthly trend change for a convincing 3-month higher low. But we can look at the weekly chart for Tesla and say we have not confirmed a clear uptrend, which is a higher low and higher high, in 2024. So right now, we've got a significant move off the low, a higher low at 167.75, and bulls must break 200, we'll call it, to confirm the first weekly uptrend. Essentially, if we confirm a weekly uptrend, for me, that's telling me that the 3-month higher low is being set. And right now, if we really want to zoom in, not really doing so generally on long-term patterns, but 173 is our clear support zone, 180 is our clear resistance zone. And so we are just ping-ponging back and forth between this range over the last couple of weeks. I'm scouting an entry. I've been stopped out break even the last 3 attempts on a Tesla entry, but I'm looking for the weekly trend change to try and shape up for the 3-month higher low, and then we'll look for the potential of a 3-month lower high, and maybe we tighten up into 2025, but watching that higher low for now. BA, 4-month time frame. Again, if this could be an hourly chart, this can be a 5-minute chart. When you see massive volatility in both directions, you scout an equilibrium. This is a pattern that is 5 years in the making. Big drop, lower high, higher low, lower high. This is the 4-month chart just to smooth it out a little bit. And now BA is looking for a 4-month higher low compared to 113. The tricky thing is, knowing it's a 4-month time frame, it can take 2 months, 3 months for a higher low to shape up. So keep in mind, the longer term time frame you're on, the more patient you have to be for things to shape up. But we can say the most likely scenario will be a higher low compared to 113, knowing, I mean, that's not a bold statement because we could drop, 30% and still be well above 113. So there's a ton of space and a ton of time for this pattern to develop. And so we're patiently watching. And again, this one can easily go into 2025 before we get a break. On the same vein as BA, we've got JETS, the ETF for airliners. Same thing. We are still digesting the COVID move. This is the COVID dump. I just hesitated because now the bots and the algos know I said that word and they don't like it. But big dump, lower high, higher low, lower high, double bottom. I'm scouting a lower high, anything under 2250. And this 3-month pattern, again, same thing. It can take another 3-6 months to continue tightening up. If the bears set this lower high, we keep tightening up and we look for a break end of 2024 or early 2025. You can see Sweetie Pants is wanting me to let her out. Nice background view. All right, so that's what I'm watching. Some nice 3-month equilibriums, long-term patterns still shaping up, and watching for entries. And if I make an entry on these equilibriums breaking, the outlook for that trade is a year minimum. And so watching to see if we can position in long-term swings for when these equilibriums break, looking for that follow through. But got to be patient as they continue to form. We may be talking about these patterns 3 to 6 months from now if they do keep tightening up. Feel free to ask any questions. Hope you have a great start to June.